This is not financial advice. I'm recording my thoughts about Twilio, which is a communication software company. The stock dropped yesterday by about 15% and it is currently trading at about $47 with a market cap of about $8.8 billion. The stock fell largely due to their weak forward guidance in the coming quarters. At $47, the stock is trading below its book value of about $57, and I'm going to give more details in this video. Let's first look at the recent quarter earnings. They made about $1.007 billion of revenue in Q1 of 2023, which represents about 15% year-on-year growth. As you can see on my screen, they have three different revenue segments: data and applications, communications, and other revenue. And you see the split of this revenue as the communications revenue is about 85% of their revenue. Let's look at the organic revenue trend. As you can see on the screen, the organic revenue growth year on year has been dropping and it is at 15% now. Dollar-based net expansion is also heading in the wrong direction, but it's still not bad. 106% in the recent quarter is not bad. The GAAP gross margins for this company are at about 50% and they have been maintaining it since the last few quarters, which is a good sign. Most recent quarter, as you can see on my screen, the revenue is about $1 billion and the gross profit is about $490 million, and the operating expenses are high, $754 million. Their gross profit is $490 million and they spent $754 million. So obviously there is a loss of about $264 million. So that's about $250 million of loss in one single quarter. That's a burn rate of about $1 billion a year. Stock-based compensation, as you see, is about 16% of the revenue, $160,000 off of $1 billion of revenue. But they're saying it is heading in the right direction. That means they are reducing the stock-based compensation quarter after quarter. So that is one good news. Let's look at the future guidance that upset the investors. In Q2 of 2023, they're saying they can make about $980 million to about $990 million, which only represents 4 to 5% year on year. And they're still sticking to the 15% to 25% annual revenue growth over the medium term, but we have to see how they're going to achieve, because in the next quarter, they're only saying 4 to 5%. And we also need to understand that almost 30% of their revenue come from international companies. Due to the dollar being very strong, that is affecting their revenues when they convert the international currency into the US dollar. And as I said before, the stock-based compensation as a percentage of revenue is lower in 2023 than 2022. So they're saying it would be reducing to 10 to 12% of revenue for fiscal 2027. So it's heading in the right direction. As you saw before, it's about 16% in the Q1 of 2023. And the most important sentence that I see is that they're targeting GAAP profitability for the fiscal year of 2027. That's anytime between mid of 2026 to mid of 2027. So we have more than 3 years before they can achieve GAAP profitability. Let's look at the stock dilution now. This company has more than $4.5 billion of cash and cash equivalents. So they have no reason to dilute the shareholders. In other words, if they offer stock-based compensation, they can always buy it back to keep the number of outstanding shares the same year over year. But Twilio is not interested in doing that. They are diluting the shareholders significantly. As you can see on my screen, by end of March 2022, they had about 181 million, but by end of March 31st of 2023, they have about 186 million outstanding shares. So that's about 3.3% dilution year on year, which is significant. Now let's look at the balance sheet before we move on to the valuation. In the balance sheet, as you can see on my screen, the cash and cash equivalents and short-term marketable securities are close to $4 billion. The total assets are about $12.3 billion and the total liabilities are about $2 billion. It means that if this company wants to close their operations, as shareholders, we will have about $10.3 billion of equity. This number is arrived at when we deduct the liabilities from assets. Assets of 12.3 billion and liabilities of 2 billion. When I deduct 2 billion from 12.3 billion, I'm left with 10.3 billion. That is what the shareholders will get. The market cap is about $8.7 billion, right? So this means that the stock is undervalued by about 15% to 20%. Let's move on to the valuation now. I'm going to show two cases. Both are conservative cases in my opinion. I'm not going to give any great execution case. In the conservative case number 1, they made about $3.8 billion of revenue in 2022. Even though they're guiding for 4 to 5% increase in revenue in the next quarter, they're still sticking to 15% growth rate for the long term or the medium term. So I'm still keeping 15% revenue growth rate. That's what the management said. That's going to yield about $7.6 billion of revenue for this company. And since this company has gross margins in the order of 50%, I can comfortably assign a 15% net profit margin with which this company will make about $1.1 billion of net income in 2027. I'm going to assign a multiple of 20, which I think is appropriate for 15% growth rate and 15% net profit margin. So this company's market cap in 2027 would be about $23 billion. With respect to number of outstanding shares, as we know, currently they have about 186 million outstanding shares. Even though they have no reason to dilute the shareholders, they're doing it. So I'm going to assume 4% dilution in the next 5 years, with which this company will have 223 million outstanding shares in 2027. When I divide the 23 billion market cap with 223 million outstanding shares, I come up with $103 of price target for Twilio in 2027. Current stock price is about $46, right? That's about 121% gain, which is very attractive. Now let me show another valuation, which is even more conservative. The only thing I changed is the growth rate. I changed it to 10% instead of 15%, just to be conservative. I'm keeping the multiple same, and I'm keeping the dilution same. With that, this company would be worth about $82 in 2027, and that's about 77% gain, which definitely will beat the S&P 500. In conclusion, I'm estimating $83 and $103 price target for this company in next 5 years, both of which will beat the S&P 500 and give us attractive gains. And also on the downside, this company is already trading below its book value by about 15 to 20%. So I do not see much downside risk with this company. So overall, I think Twilio is a buy at $46. Let me know your thoughts in the comments. Thank you so much for watching.